And welcome to another episode of Experts Speak. I am Michael DeLon, and today I am talking with Matthew Sercely. And well, Matthew, first of all, thank you for spending some time with me today to be my guest.
Thank you for having me on. I really appreciate it.
Yeah, you are welcome. It's going to be a great conversation because Matthew runs a company and helps business owners and real estate investors save money on taxes, not just one year, but year after year after year. So I'm pretty intrigued by this, Matthew. It's going to be a great conversation. So as we get ready to dive in, tell me, how in the world did you get doing what you're doing today?
So I'm an attorney. I've been an attorney for nearly 15 years now. And most of my career, I did personal injury work. And
Okay.
then 2020 happened and lockdowns happened and no one was driving anymore. And so like my my commission got cut in half in 2020
Wow. Yeah.
because of just how many fewer car wrecks there were. And frankly, I wasn't sure my day job company was going to survive. I
Okay.
know a lot of law firms that did personal injuries that just they died
Wow.
um, because their revenue dropped by more than half in the first year. And I'm a serial entrepreneur. I counted it up a while back. I've started at least 14 different business ventures.
Wow.
My first one when I was like 10 years old.
Yeah.
So I'm like, okay, I'll start a side hustle. I'll do something. And it was really just kind of one of those like things you find online. How do I find the business I should start? Well, find something you know something about and that you like to do. And ideally, that's a relatively high value thing to sell. And I said, well, I've had all these businesses. I had to figure out all this tax stuff for my own businesses. And I invest in real estate and I know a lot of tax stuff about that. And I did study taxes in law school. I'm just going to try to do this. I'll just see if people are willing to pay me for my tax advice. And lo and behold, here nearly 4 years later, people are. And I've saved hundreds of thousands of dollars for people.
Wow. That's cool. That's a neat story. You don't often hear of an attorney, going out of business. But I never really thought about the pandemic and people stopping driving and how that affected crashes and how that would affect PI attorney. And it's like, well, there's a domino effect there that it just never dawned on me. So well done to you to pivot and then to go back and look and say, okay, what am I good at? What do people need help with? And well, Lord knows taxes are one thing because nobody understands it. And I think a lot of people are probably making some mistakes or whether it's overt or covert, they just don't know because the tax code is totally complex. So unpack some of the areas that you see business owners or investors just missing the boat on and that are kind of that low hanging fruit. Let's just start there.
So the first thing you want to do is you just want to get your company set up the right way. Um, there's different ways of setting up a company and different ways you can be taxed. You can be taxed as a sole proprietorship or as a partnership or as a traditional corporation. But about 25, 30 years ago, they created a new thing called an S corporation, which for 95% of small businesses is where you want to be.
Yeah.
But not for every small business. Particularly real estate businesses oftentimes don't want to be any sort of a corporation. But figuring out just what type of taxation to start with is easily half the battle.
Mm-hmm.
I mean, that's going to be like you're going to save more taxes by just doing that right than everything else combined.
Wow. Okay. So take that with you if you're yeah, and I loved how you say not every business should be an S corp, but probably most. I'll say many. I know we weren't at the beginning, and then we switched to an S corp, and it's like woohoo! I love that. So totally do that. Okay, so that's number one, real low hanging fruit. What are some other like misconceptions or where's the money laying on the table that most business owners go, I had no idea.
So one of my favorite things to do is to look at money you're already spending and make that a business expense.
Yeah.
Sometimes that's as simple as, oh, I use my phone and my home internet for my business, so I should pay for that as part of the business. But there's a lot more there. If you have kids, you can hire your kids in your business.
Yep.
And then you can have them pay for everything you're paying for them almost. Like you got to provide food and shelter.
Right.
But I mean, you don't have to provide music lessons. You don't have to provide video game systems. And your kids get their own standard deduction. And this year, you can pay $14,600 to your kid and they pay zero income tax, assuming they have no other income.
Mm-hmm.
And you get that as a tax write-off. And if you're in the, basically the 1/3 tax bracket, you pay them $10,000. You just saved $3,300 on money you're probably spending anyway. It also has the benefit of now that it's their money, they're maybe a little more careful about the money.
Yeah.
I did this with my own daughter. She's 12 now. She started as my bookkeeper when she was 10. And it's amazing how, like, hey, Dad, can I have some money? You have an ATM card. The ATM's over there. Go get the money to spend yourself.
Right. That's
Well,
right.
maybe I don't really want that. Oh,
Yes.
you don't. Good to know.
Absolutely. Yeah. I've got two daughters at home, one 15, one 13, and prom was coming up or homecoming or something. And I'd like to have a dress, and oh, they're $180. And she babysits, so she's got her own money. So she came home with a used dress from some resale shop for like $35. And she's like, look what I bought. I'm like, way to go, girl. It is amazing when it's their money. But it's really interesting because that is something that I see a lot of business owners overlooking. Right. And we've hired both of my daughters in the business, and it's just a little thing, but it adds up. And it's a matter of staying within the boundaries of the law. But as long as you're within, I always look at it like a bridge and you got guardrails. As long as
Mhm.
I'm within the guardrails, there's a lot of flexibility, but you have to understand how to leverage the code and do it properly. Right. And that's where you come in because you understand it.
And sometimes it's not such a little thing. I have some clients I work with. They do very well for themselves. They live in California. They've got two kids going to college. They've set it up that they're paying their kids the full $14,600, plus their company is able to pay for $5,000 of educational expenses as a tax deduction. So the parents are writing off practically $40,000 in income at the 35% tax bracket. They're saving like 14 grand.
Yeah.
Now the kids do owe a little bit of payroll tax on that money, but it's something like $5,000, if that.
Yeah.
The family as a whole is coming out over 10 grand ahead.
Yeah.
And that's basically two things you can do. There's a lot more out there.
Yeah, yeah. That's fascinating. So it's a matter of having somebody like Matthew who really just understands the tax code, and you coming to the table and saying, "Okay, here's my situation. This is what I do," and letting him do his magic to go, "Okay, here are some ideas. Let's do maybe one at a time." Do you find it's kind of one at a time thing, or do you like, here are 22 things you should be doing, and do you guide people through it?
So I absolutely guide people through it. When they hire me, the first thing we do is a very long conversation. It's usually an hour, sometimes it's longer, where I dig as much as I can into their business, but into their personal life. Because again, what you do personally can be turned into a business expense. So I need to know about that. I then go and I write up a tax plan. Now, if you don't have an LLC or a corporation, the tax plan starts, go set up an LLC or a corporation, go get an EIN, go get a bank account, go get a credit card, like basic steps you need to take as part of your business. If you already have all those things, I usually still remind you about those things because it's amazing how it's easy to either not know some of that or forget about it. I cover a few other business things as well. Like there's now a mandatory report you have to file with the federal government for any sort of LLC or corporation starting this year. It's called a BOI report. A lot of people don't know about that. So I go over all that business stuff, the basics of it. And then I go into usually some very specific things. You've told me you do this. Let's write this off. You told me you do this. Let's write this off. But then I do some education in that, and I do some continuing education with my clients. My goal is basically to mix a metaphor. I give them a fish, but then I teach them to fish. Like I
Mm,
don't want them to have to figure it out all on their own. But on the other hand, I will never know their business as well as they will. I will never know their family life as well as they will. So it's amazing how often I have a client who 3, 4, 6, 12 months in says, hey, I'm spending money on this. I think I could maybe write it off if I justify it this way. What do you think, Matthew?
yes.
And about 80% of the time, it's either yes, that will work, or let's refine that a little bit and you can do it.
Yeah.
Probably about 20% of the time, there's a specific rule that says, no, no, you can't do that. Like, no, you can't write off the country club. Yes, you use it in your business. Yes, it probably should be a valid business expense. There's a specific rule. So no, you just can't do that.
Yeah.
But I like the way you're thinking. Let's keep thinking
Right.
about that.
Yeah. And I love that analogy you had about fish and fishing, because once a business owner starts thinking this way, they start seeing a lot of other opportunities to go, oh, what about this? Right. And I think what we have to understand is when you save money on taxes, that money usually just drops right to the bottom line.
Mm-hmm.
And you don't have to go try to generate more revenue. You're basically making your business more efficient because you're utilizing and leveraging the tax code that's available to you. Is that fair?
Exactly. I mean, it's basically a tax-free form of income almost. If your taxes go by now by $5,000, that's immediately $5,000 more in your pocket.
Yeah.
And oftentimes these changes will pay off for years and years and years. It is not uncommon for me to find $5,000 to $10,000 in savings for a client that will last as long as the tax code is the way it is. Like
Yeah.
as long as they don't amend it, could last for 5 years, 10 years, 20 years.
Yeah.
So the return on investment is really fantastic. Assuming you're paying taxes. Like I do have some people come to me, it's like, oh, I made $5,000. How can I save in taxes?
Yeah.
And I look at them and it's like, no, go make more money.
That's right.
You pay so little in tax in your business, it makes no sense for you to spend 20 or 30 or 40 hours to save $500 in taxes.
Right.
$5,000 in taxes, absolutely.
Yeah.
But go make more money.
Yeah.
Um,
Well,
Again, I love. I say, hey, be on my email list, learn about this stuff, so that when you make the money, you're more ready to do it. Keep learning about it, but like it shouldn't be your focus when you're a new business person.
right.
Like, go make money, be profitable, then worry about your taxes.
Exactly. Yeah. And I love the long view that you just laid out there. And so many times we forget that, whether it's in marketing or tax savings, is I may save $5,000 or $10,000 this year, but if I can do that every year because I'm now leveraging and taking advantage of the code, well, over 5 years, that's a $50,000 savings if I did it for 5 years. Wow. What could I do with that kind of money to reinvest my business or grow my, or take a trip to Scotland or whatever? But you have to look at that long term to go, well, that's very interesting. So, how do you typically work with clients? Do they come in and you work with them for a year and then you kind of set them up and taught them to fish and then they consult, or is it a long term short? How does it even work? It's just fascinating to me.
So again, I start off doing that initial tax plan for people. And by the way, after I give the tax plan, we then have another phone call. I explain it. You can ask me questions, and then you get 30 days of unlimited email access to me after the tax plan's done. Some people are totally fine with that. And they go on and say, thank you so much. I'm done. Uh, a majority of my clients then will set up a recurring meeting with me. Usually it's quarterly, but some will do it every other month. I have two clients who we have a monthly phone call.
Mm-hmm.
Any of those also comes with continuing email access to me. So, anything quick, hey, I'm thinking about this, I'm thinking about that, you can just email me. But then we have these regular phone calls. And like, we're not just talking about taxes. Like, we talk about taxes, but we'll talk about a lot of things in the business as well. Like, I want my clients to stay in business so they can keep paying me, frankly.
Absolutely.
So like, if I see a way for them to make money, I'm going to tell it to them, even though it's not tax savings. But I also cover a lot of things that it maybe you don't think about so much. Like, hey, do you have a will? Do you have life insurance?
Yep.
Do you have a succession plan, which is particularly important if you're in a partnership?
Yes.
What's going to happen to your business if one of the two of you dies? Does the other partner get 100%? What about your family? Again, that's not tax planning, and I can't necessarily answer all these questions, but I'm a big believer in helping people think about it because I am a lawyer and we're trained to be pessimists. We're trained for like what can go wrong. And I think most business people, most successful business people are optimists, and they need to be optimistic, but they do need somebody to sit there and go, hey, what about this? What about that?
Right.
So it really is ideally it almost turns into kind of one of those virtual CFO services
Mm-hmm.
where I'm just there to continually help them with anything I can with the business, keep doing it, the tax help. Um, some of my clients will also have me do their taxes. Some don't. I don't really care either way. Basically, some people are like, you gave me the advice, I want you to do the taxes. I'm glad to do that, and I do charge extra for that. Some are like, I want a second opinion. I want the tax advice from you, but I like somebody else reviewing what you're telling me. I'm going to have somebody else do my taxes. Great.
Right.
Whatever you want to do, I'm totally willing to do that.
Mm-hmm.
Um, but again, ideally this becomes a long-term relationship. In kind of the words of Robert Kiyosaki, I become part of your business team.
Yeah.
And ideally I'll be part of your business team for 5 years, 10 years, 20 years,
Right.
as your business grows, as it changes, as the tax code changes, helping you to keep that guardrail on the bridge, like, because those guardrails move over time.
Yes.
Maybe somebody tears down the bridge and builds it over here, and now it's in a different place. You can't know all of that when you're running your business. Frankly, I can't know all of it, but I can at least, try to keep up with it, and get the big changes as they're coming. And again, I spend a lot of time also just tracking regulatory changes.
Yeah.
So I do a weekly email to a lot of people. I have an email list, and I just wrote the one for next week because I'm busy next week. And it's not a tax topic directly, but it's about the rules for whether somebody is an employee or an independent contractor are changing in March, or the federal rules, I should say.
Oh, really?
Um, they're actually becoming a little bit easier to call somebody a contractor in most cases, but there's some instances where some people who are currently contractors will be employees. And again, that's not directly a tax topic, but it can become one that if you have a contractor who doesn't pay their taxes, and then the IRS says, no, no, they're not a contractor, they're an employee, now you're on the hook for those taxes.
Yes. Wow. And who should you call? You should call Matthew immediately. No. Well, you should. But it's the other thing you were talking about is succession planning. Is in business, so many times the business owner doesn't even think about that. But whether you're going to close your business, sell your business, or transfer it to somebody, there are tax ramifications, probably in all of those, that are different, that are magnified, especially if you're going to sell it. And are you doing it with cash? Or are you doing it with stock? Or are you doing it over time? And every decision matters. And that's why you need somebody like Matthew on your team to go, okay, I'm in water that I really shouldn't be in. Because you're a business owner, you're really good at what you do. Stay in your lane, bring a team around you who can help guide, counsel, advise, and keep more money going to the bottom line. I think one of my challenges, Matthew, is most business owners focus on top line revenue.
Mm-hmm.
I run a 7-figure business. I run an 8-figure business. They ain't making any money, but they got all kinds of revenue, right? And it's like, time out. I'm after net profit personally. That's the number we really keep an eye on. And what you do is you help drive more money to that bottom line by leveraging the tax code.
And I love that example of selling a company, because like some people are like, oh, how much of a difference could it make? Let me tell you what a difference it can make. There is one way to sell your company where it is basically all treated as ordinary income. So if you're selling a company for $1 million, you're probably paying 32, 33, 34% tax on that. There's another way to do it where it's a capital gain where you pay 20%. On $1 million sale, that's $130,000 difference in your pocket. Yeah, it
That's a
makes a
big
big
deal.
difference.
That's a big deal. Yeah. So it's crazy, because I think a business owners many times don't think about things like this, because we're entrepreneurs. We are forward thinking, positive. Let's go. And yeah, you take care of that. But a lot of CPAs don't understand the tax code. That's not their gig. Not that this bad. You need somebody who understands it. And I love the fact that you're an attorney, that you come at it from that perspective too. That just adds some more credibility. But somebody who can help navigate those waters to say, here's where you are in your business, here's where you are in your family situation. Wow, how about this? And it's always the business owner's decision whether they want to do it or not, right? It's their
Mm-hmm.
money, but it's the counsel and the wisdom and the access. I think that's really cool. The email access to go, uh-oh, Matthew, what do I do? Right. And then probably in a few hours, you can send them back and say, well, there you go. You know, I've got a brilliant CPA. And we do that with Bob all the time. We just email him something and here comes a paragraph to go, here's what you do. It's like, okay, thanks. Invaluable.
Yeah, the peace of mind for some people is the biggest thing. Like I've had clients who call me up and it's like, hey, here's the situation. I'll tell them it's like, well, I mean, you're doing a lot right. Like I'll save you some money, but I may not save you. Like you may pay me more than I save you. And they've said, I don't care. I'm going to sleep better at night having somebody look at this. And you might save me more, but even if I end up losing $500 or $1,000, if I know I'm doing it right, that's worth something to me.
100%.
I don't recommend that for a brand new business. Again, go make more money, but
Right.
at some point, especially if you're having trouble sleeping at night because you're not sure if you're doing the right thing, definitely work with somebody.
Yeah.
And I'm a big believer in I'm never going to tell my clients what to do in any gray area. And probably 90% of the tax code is a gray area.
Mm-hmm.
But there's, gray area very safe. There's gray area kind of dangerous.
Yes.
It's not my job to make a decision as to how aggressive my client should be.
Yeah.
It is my job to let them know how dangerous I think their proposal is,
Mm-hmm.
and then they can make a rational, informed choice.
Yes.
Now, I do definitely prefer to work with people who are a little more aggressive. I find, if anything, more often than not, I'm having to tell people, no, too aggressive, back off a little
Yeah.
bit,
That's good.
back off just a little bit. But frankly, that's a lot more fun to me
Yeah.
than to work with people who are irrationally afraid of the IRS.
Right. Yeah.
We should all be a little bit afraid of the IRS. But I think a lot of people are just totally irrationally afraid of the IRS. Like, oh, they're going to just jump out and get me. The
Okay.
number of people they audit is incredibly tiny.
Right.
Most people who get in trouble with the IRS, it's like, oh, you owe an extra $1,000. You owe an extra $2,000. That sucks. But frankly, if that's a life-changing event, you have bigger problems than that
Sure.
anyway.
That's right.
Um, and so again, it's like I want my clients to be rationally aware of what is the real danger of what they're doing, because I've seen it go both ways. I've had clients think, oh, I'm being super, super aggressive. And it's like, man, you are so safe what you're doing. You could push it twice as far.
Right.
I've also had a number of clients who think they're being very, very safe. And it's like, you are absolutely going to get audited. You have crossed a line here, and they're going to be able to tell from your tax return it's wrong. And you are like guaranteed an audit within the next 3 to 4 years.
Wow.
That's fixed that.
Yeah.
Most people aren't on either of those extremes, but it's amazing how many people they have no idea that they're even on an extreme.
Yeah.
Because
Well,
again, why would you? It's not your area of expertise.
absolutely. I don't know where the boundaries are, right? So I'm just going to go and go and go. And I remember a financial guy years and years ago, this decades ago. I don't even know who it was or what he was talking about, but his phrase was, "When in doubt, deduct it." Because he was that very aggressive. He's like, yeah, odds are you're going to be okay. And if you get audited, you're going to get a slap on the wrist. You're going to pay a couple $1,000 and everything's good. And I've just always remembered that to go, yeah, we'd probably be more aggressive because I think there are, what, 3 or 4,000 people who file tax returns. I mean, good God, do you know how many tax returns there are? And most of the time, as I tell my family, we're probably small fish. Right? They got other people who just haven't paid their taxes for 15 years that they're going after. I don't know, but anyway,
Well, definitely small business people are individually at a much higher risk than the average
right,
W-2 employee.
right,
That said, there are ways to even set up your business to lower your tax audit. One of my recommendations for anybody who's in a profitable business is to set up an LLC or a corporation for your company. The very act of doing that actually lowers your risk of an audit if you do it right, if you file the right paperwork. And that's because the IRS has figured out a long time ago that anybody who's savvy enough to set up and maintain an LLC and a corporation probably keeps better records than the average business person.
yeah,
It's harder to catch them in a mistake. It's harder to catch them in any sort of fraud. Even if they're committing fraud, it's harder to catch them. And I don't recommend doing that. But, and it's just the low hanging fruit are sole proprietors and partners who don't have any sort of a business entity, are just kind of doing everything, or oftentimes mixing funds between the business and their personal accounts. Those are the easy people to go after. And so the IRS goes after a lot more of those people because it's just easier. And of course, human beings are kind of lazy, right? You do the easy job when you can do it.
That's right. Absolutely. Absolutely. Well, we could talk for hours on this because I've got a whole list of questions I think I could pepper you with, all around how to save money on taxes. And we don't have time for that, but I know you've got some resources and things. How do people take that next step with you, Matthew, to get a hold of you, to find out more things of that nature?
So the best way for your audience to reach out to me is going to be to go to, I've got a special link in my website, agorist.taxadvice.com/experts speak. So AGORIST taxadvice.com/experts speak. That will let your audience download a free report of over 60 business deductions they should consider in their business. It's also got a couple personal deductions. So even if you don't have a business, it can be useful to download it. That'll get you on my email list. You'll get a follow-up email typically within 2 to 3 days where you can schedule a free consult with me to see if we're a good fit.
I like it. That is simple, folks. If you listen to that, just think of how simple he made that. So I'm going to have that list in the show notes, of course, because a lot of my audience are business owners. They're out doing things, right? And they're listening to this on a cell phone or whatever. So I'm going to make sure that link is in the show notes so that you can reach out and get that list. I mean, 60 business deductions you should be taking. That's worth gold in and of itself. But then that free consultation to help understand how Matthew could potentially save you really thousands of dollars year after year. You add it up, it could become a massive thing down to the bottom line profits, right? Because when you save money on taxes, drops to the bottom line. And he's helped lots of business owners and do the same thing. So, Matthew, this has been a really intriguing, fun conversation, and I appreciate what you do. I'm thankful that the pandemic came, that you could pivot. And who would have ever said that, right? But what a cool business to start, to be able to help so many people. Thank you for what you do, and thanks for being my guest on Experts Speak.
I had a great time. Thanks for having me on.